All right, November has gone and passed. Let's see what they got in store for us today. All right, send it, Jonathan. All right, okay, so Freddie Mac increases government-backed loan limit. Very interesting. All right, send it again. Solid catch for the say so myself. We're talking about should you be worried as a seller going into 2023. Interesting. All right, and number 3, here we go. And got it again. Interest rates and where they are going. That's what we'll be talking about third. Let's get into it. Thank you all again so much for watching. As always, is to keep you guys ahead. All right. So, number 1, the government has officially raised its loan limits for government-backed loans, which means that the amount that you can borrow with as little as 3.5 to 5% down has drastically increased. So, at 5% down, you can now borrow up to $1,146,632. And with as little as 3% down, you can borrow as much as $748,660. Now, this is due to the rise in inflation and rising costs of everything. But it is good news because now, instead of putting 20% down for that $1 million house, you only need to put 5% down, which enables a lot more people to be able to access those $1 million homes that are so common here, right here in Northern Virginia. So that's gonna be number 1. Super quick, moving on. All right, so number 2, you're a seller going into 2023. You want to sell your home. Should you be worried? What's going to happen this coming up year? Well, most credible sources are predicting average home price gains to stall completely, averaging 0% in 2023. Now, that's not the best of news, as it could mean that sellers will end up walking away with a lot less money this coming up year. Right now, inventory is still down compared to normal levels, but as more and more buyers drop out of the market as interest rates still increase, the difference between the demand and the supply is starting to quickly narrow, which means that sellers, which they're already experiencing, have a lot less bargaining power than they used to have just last year. So, although controversial, a lot of people are suggesting that right now is the best time to sell for the next foreseeable future for all sellers, because home prices are still way up compared to last year. Interest rates are not as high as they're going to likely be. And looking into 2023, the Fed chair says it is very likely we will head into a recession, which will put more people out of work and drive down the demand in the housing market further. So, best case scenario, listing your home now while the economy is still good and the labor market is still solid is actually quite a smart decision. All right, now let's move into number 3, which is talking about the interest rates and where they're going to go. So every 2 weeks after a Fed chair meeting, the Federal Reserve meets to talk about the future of the economy and actions it plans to take. So they just released their notes for this past meeting, and there's a lot of juicy info. So the first big thing is that the Federal Reserve has noticed that inflation is not going down as fast as they would like it. And this, of course, would lead to a logical solution that you need to keep interest rates higher for longer to tamp down this inflation. However, a lot of participants said that a reduction in the pace of rate hikes would likely be appropriate this coming up December. And this has given investors a lot of hope that this coming December, the Fed Reserve will only raise the funds by 0.5 instead of 0.75. Now, just to keep in mind, the Fed's goal is to raise the federal funds rate to 5%. Currently it's at 3.75%, which means that no matter if they raise the interest rates by 0.5 or 0.75 this coming up December, the Fed is still going to raise interest rates up to 5%. So it might just take a little bit longer and stretch out the pain a little bit more. The conclusion is that interest rates are going to rise over time going into 2023. Additionally, the inflation report will also come out on December 13th, which is a day before the Federal Reserve meets, and that will greatly impact their decision on whether to raise it by 0.75 or 0.5. Now, due to this optimism about the interest rates only increasing by 50 basis points instead of 75 this coming up December, mortgage rates have dropped sharply, down from 7% or over 7% to about 6.5% at a high around mid-November. Now, mortgage rates are sometimes an emotional subject. So when you see the rates rise and fall, it really is an extremely unsteady market, and any little thing can affect where the rates go. Okay, and so that's going to be it For the interest rates, again, in conclusion, the interest rates are going to continue going up. As I said, they still have to reach a federal funds rate of 5%, which means that interest rates are likely going to stay at around 7% going into 2023. And as for this week's data, or this month's data, it is highly inaccurate just because it's the holiday season. The housing market is drastically slowing down because no one wants to buy or sell during Thanksgiving, during Christmas, and we're probably not going to see any real data until about February, where we should see the real estate market start to pick back up just a little bit. All right, well, thank you all so much for watching. As always, this is to keep you guys ahead. Make sure to comment down below what you thought was interesting, any suggestions that you guys might have, and whether you guys want to buy or sell. Anyways, have a great rest of your day. We'll see you guys next time. Peace.